Good afternoon. This is Kevin Baker with Bakes Takes. Welcome to the show. It's Saturday, May 8th. Hope you had a great week. I sure did. Why I do this, my sons Bobby and Jack, they're 24 and 22. Bobby came back for Mom's birthday, so it's been great to see him. I couldn't get him on the show, unfortunately, but they're the reason I do this. I went through the 87 crash as a stockbroker, got my head handed to me, and started my journey. I realized that I didn't know what I was doing. Wall Street analysts didn't know what they were doing, and I wanted to. So I read everything I could. I read hundreds of books, earned my MBA, discovered technical analysis, reading charts, and really it was a game changer for me. I do a lot of fundamental work. I can tear apart balance sheets and income statements with anybody, talk to suppliers, customer, competitors, but I do the technical analysis first to focus my timing and my effort on productive areas, and then I do the fundamental work, which I share with you. It's not right or wrong, it just works for me. I read the Wall Street Journal, Barron's, The Economist, so you don't have to. You can if you want to, but this is what I do. I listen to podcasts, I devour relevant newsletters, I monitor what my Google alerts bring, I point you to them, and always give attribution, but know that if you don't want to do that, I'll do that for you, and I eat home cooking. I only talk about things that interest me, that I'm invested in, I have no conflicts. So tell me what your pain points are, problems you'd like me to solve or address, topics I should cover, and I really appreciate the feedback, which is increasing every week. Thank you. Stay tuned. I'm very likely going to be offering 2, maybe 3 Patreon levels where there's additional content, additional access to me, maybe a weekly call where I teach technical analysis and cover your charts that are interesting to you more than I can do here. And I really appreciate your support in advance. Mike and I are going to build a site and get us to the next level. And I'd love to have maybe one of those Patreon levels have a direct impact on designing the show and suggesting topics and what have you. So here's my number, 610-331-4283. Call me. For right now, I'm going to dedicate some time. I'd love to talk to you live and find out how I can become better. And so I appreciate that in advance. Here's my disclaimer. This is not investment advice. Please conduct and share your own due diligence. And the more you share, the more the community benefits. The YouTube subscribers are still going north. And that's a pretty good segue. I keep getting questions on GameStop. Last I checked, we had 26,000 views, Mike, of the GameStop call, and it's getting long in the tooth. I'm being honest. Here is the chart again. We're still building this wedge, and we have not taken out the top nor the bottom yet. I thought it happened by now, so we got maybe another week at the most before this resolves itself one way or another. I've talked about 212 and taking that out. That's what I lean towards. But we need to see some sort of news. We need to see a very high-profile CEO being named, maybe a digital asset acquired. I don't have any inside information at all, but I just know that this chart pattern resolves itself one way or another very soon. I hope it's to the upside for the holders, and but for the downside, it's going to be a pretty telling sell signal if that happens. So take a look at the chart. If you're listening to me, go to the YouTube channel. So my take is do or die this week for GameStop. Okay, Charlie, I'm going to get to your ETF question next week. Bobby, I'm going to address your question next week. I had some other things that I had to take care of. Please share this with your Robinhood, your Reddit, your Wall Street Bets friends. Send your stocks ideas. That's really where I think we add some value, and I'll offer strategy for them as well. Please stay tuned. My themes and groups, and I can't be much more transparent. Here's the portfolio. I started this back in July 1st of last year, and so far, year to date, we're up 24.53%. About double the S&P. That's pretty darn good. And so I can't put my feet to the fire much more than by showing, here's what I've invested in, here are the real numbers, and I make a point here. This column over to the far right, you don't see any red. I'm allergic to red, and so I cut losses. And I want you to do this too, and I want you to be honest with yourself. Go to your portfolio, and if you see red 15% or greater, I want you to get rid of it, because it's eating into your returns, and it's capital that could be deployed elsewhere. I'm not going to go through all 10 of the themes that we like here. You can see what's going on. But, Bitcoin is clearly, the Grayscale Trust has been a clear winner for us. And this is the thing. The way portfolios work is that, you tend to have, I have 10 stocks. I have 2 that are, kind of laggards. I've got a middle ground that's okay. And then you've got big winners. And you want to let your winners run. Cut losses, let your winners run. And it sounds easy, but it's difficult to do in practice. I think many of you have found that. But the Grayscale Bitcoin Trust, we're up 208% this year. And this is pure profit. When we doubled our money last year, I took the original investment off the table, and this is pure profit that I'm letting ride here. And I know what's going on. You probably feel this too. This is kind of becoming gold, so that when Ethereum and Doge have big up days, that money seems to come out of Bitcoin to a large extent. And so we're chopping around here, but there's been there's no sell signal. I'm just going to let this consolidate and do what it will. And I'm just grateful that we found it. And oh, by the way, I was kicked out of this when I originally bought it. So I took the loss the first time around and got back in. And so I'm really glad that we did. Next, North Shore Uranium, and I know I've been pounding this, but it's for good reason. I mean, this is a pretty chart, folks. You go back to July here, around $30. That's when we bought it. July 25th. I'm on the record. You can see the YouTube out there. I keep putting out to show the thought process. I mispronounced I'm doing it again. Kazatomprom the first time, got a lot of heat, but I also bought the stock. And uranium story gets better and better. And this is what you want to see. You want to see new highs on big volume, the relative strength hitting new highs, 94 relative strength, which means it's outperforming 94% of the stocks that are out there. I'd love to see the other 6, but towards the end of the show, I'll go into some more bullish developments like we need them. But go to the YouTube channel. There's a lot of things there where I go through top 10 reasons why I bought this, etc. So, it's been a terrific winner, up 124% year to date, and more to come. And I'll tell you more about that later. This is a new segment that I've created. I call it Gray Swan. A black swan is an event that comes out of left field that no one sees. A guy named Nassim Taleb wrote a book called The Black Swan. And, COVID was a black swan to a great extent. I call this a gray swan because it isn't completely out of left field, but there are things that maybe are in the middle pages of The Economist that you don't read, that I do, that I want to bring to your attention. I haven't seen this talked about much at all. So The Economist, the link's in the notes. Please go there. I wish they would give me the reporters' names. They don't, but it's a great piece. China's growing military confidence puts Taiwan at risk. And it's a very strange, tenuous circumstance that the U.S. and China have towards Taiwan. But the military pressures and the tensions are mounting here. And if you want to see something really roil the stock market, some sort of meaningful military conflict over Taiwan would be a problem. And the U.S. would most likely have to be involved at some point in some fashion. And so more on this later or in the future, because this is going to be a topic that I'm sure we're going to see more of. But keep an eye on it. I've got this plugged into my Google alerts so that if anything comes out of left field from the web, some crazy story in a distant publication, I'm going to bring it to you. So just with where stocks are right now, a shock like that would not be tolerated well at all, in my view. So there's the Gray Swan for this week. Podcasts of the week, and this is what's I love about doing this, is that that antenna goes up, and then what happens? I listen to the Farrcast. Michael Farr's, he's a money manager out of D.C., very bright guy, very prevalent on CNBC. And in 21 minutes, he and his political strategist, Dan Mahafee, talk about China building warships as rapidly as they ever have. And another sign of threatening Taiwan. So there's two data points that came out of the blue in a week that I think could be impactful for stock prices down the road. Very tough to predict, but I don't want you blindsided by news like that. Next podcast is Pivot, and I try to be intellectually honest and give listen to the left as well as to the right. These are clear liberals, but self-described. They actually prefer progressives, but whatever. They're left of center. Kara Swisher and Scott Galloway, they're very bright, and they do this segment of predictions at around 39 minutes in this episode. And I bring it up because Scott talks about Peloton creating a match rival, a dating app rival. And it really makes a lot of sense when you think about it. Peloton users are fit, almost by definition, probably hot, and can afford a $2,000 bike, so they have some means. So it's a very logical extension of the brand, which obviously has been hit this past week. I know a lot of you own the stock, so I just bring this out there to, number one, recommend Pivot all the time, but this particular one, if you own Match or any other of the dating apps, the Bumbles of the world, you might want to pay attention to this, or at least ask the questions. And then the next thing they talk about is Elon Musk sounding like Jack Welch. Now, I'm probably dating myself, but the last earnings report, 25 cents of the 93 cents they made came from selling Bitcoin. Had nothing to do with selling EVs. So, trading Bitcoin to come up with 25 cents for the earnings beat. Not a high quality earnings report in my view, or in many's view. And the reason I bring up Jack Welch, the former CEO of GE way back then in the 90s, was he had the finance unit in a real estate portfolio that magically could, they could sell a building or a warehouse or what have you, and magically come up with an extra penny to beat the earnings consensus time after time after time. And it was legal, and it was, obviously under that era of accounting rules, it was okay, but it kind of didn't pass the smell test. And so my point being, and Scott's point, is that watch the SEC. If all of a sudden Elon Musk tweets something about Bitcoin and it pops the stock price up, and then lo and behold, they sell that news that he creates to come up with an earnings beat, it's going to be a problem. So he's run afoul of the SEC in the past. I'm not saying he's going to do it, but it's something to consider if you're a Tesla shareholder. And he's going to be on SNL, I believe, tonight, right? And watch for an SEC skit and watch for a Dogecoin skit. I think that's going to put in the peak for Dogecoin, give or take. And again, Parabola's correct, 80%. And I said it before that I think it's going to take some time. I said 6 months, but I think it drops below a dime because there's no support. It's just a straight up, and this isn't Bitcoin. This isn't a set number of shares with blockchain and corporate buying. It's fun speculation, and God bless you guys that are making some money. But I think this goes below a dime, and I think this week is probably going to be the zenith for Dogecoin, given the SNL news. So, and again, I don't have any inside baseball there. That's just what I'm hearing. Next, reporters of the week. This is CNBC. Corn futures jumped to a 7-year high on supply concerns. And we've talked on the show in the past, China having to replenish their swine herd. They obviously have to feed the animals dramatically, and there's just general demand for corn because of the economic recovery that's happening. But I mean, a 7-year high, this is getting meaningful, and we're involved in TAGS, TAGS, the agricultural fund from Tecurium. This is 25% of that fund, sugar, wheat, and soybeans are the other. They're all going north, and I just bring this up because my take is corn's going up. It's a 7-year high. It's just another to the list of commodities that are going north, and I think that it's going to impact stock prices at some point. So stay tuned. Charts tweets of the week. This is Jim Bianco, very bright guy, and like he says, pretty much every valuation metric looks like this, a record high. This is stocks to GDP, and please go to the YouTube channel to see this. It's another Matterhorn, and it's as high as it's been, well above the dot-com bubble and far above the 09 crisis low. So stocks are expensive. I know interest rates are low. That's the argument, but you just can't argue with this. So I'm a bull, but I'm a bull with a head on a swivel and a sell button that's close by, and I want you to be the same. Next is the Bloomberg Commodities Index, and this is the best year to date we've seen in this index ever. And it's a pretty impressive chart, and I think that we're going to continue north for the rest of the year. And Powell will say that inflation is temporary, but the commodity index is showing that it's a pretty persistent uptrend that's begun, and I don't think it's over. Next, newsletters of the week, the Bear Traps report. Larry McDonald's team really like this, recommended highly. And here's copper at 10-year highs. And again, we own COPX, the copper miners, but a 10-year high is pretty significant. And frankly, it looks like it's going to blow through that, and then you've really got some more upside coming. Copper is more prevalent in EV vehicles than traditional cars, and China is screaming to the upside. Their demand for copper is monstrous, and so we continue to like copper, and the bullish thesis I just think continues to build. Next is lumber futures, and I don't know why I didn't see an ETF back in July of last year that caught my attention. It just didn't. Shame on me. I go through them every month and I miss stuff. But here's lumber futures since 1986. So when I mention charts, I want you to pay attention to the timeline. The longer these levels are broached, the more meaningful they are. I mean, this is really significant. If you're buying a home, doing a project, you're probably already feeling this. It's a hell of a spike and doesn't look to abate anytime soon. So pay attention to that. Margin debt is the next chart, and again, I want to be honest, but I also don't want to be an ostrich. And when margin debt hits new highs like this. In the past, which is the dot-com bubble and the financial crisis, the S&P held up for 6 months in the first case, 4.5 in the latter. So, we're kind of getting on borrowed time with new highs for the S&P, which we are hitting. The volume isn't very impressive, but just it's another indicator that we're late in the game here, and maybe at least watch the sell levels. And be less forgiving of stocks that aren't working, and that's certainly my modus operandi. And then I'd love to see this. Larry swapped out of URA, which I also own, the uranium ETF, for the more pure play, less liquid but more pure play URNM, the North Shore Uranium Trust. And it's obviously we just showed it before. It's a beautiful chart. And, he sees a doubling of spot uranium in 12 to 18 months. That certainly implies that uranium, the miners, URNM, the miners, are going to be going up north in that. And I think that I obviously agree, and I'm really pleased that we got you on this trend back in July of last year, but there's way more to go. So don't move yet. This is another take on the Bloomberg Commodity Index, highest since September 2012. Commodities on a tear, and boy, they are. And I just don't see this reversing anytime soon. Here's the chart of uranium, a little different take on that they do, but I like this. They're thinking the volume surge that they've seen in recent months, and it's absolutely substantial. It's a clear breakout. It's clearly bullish, and stay with us because I think we're going to continue to benefit from this theme. This is a little bit wonky, but it just shows backwardation, the percentage of commodities in backwardation, which means the spot price is above the 1 year futures level, which just shows that the demand for the commodity in the near term is very, very high, and you have to pay up to get it. And again, it's another 14, 15-year high, and it just points again to commodities which we're our portfolio is benefiting from: uranium, from copper, from the agriculture, cannabis to a lesser extent. The commodity theme is serving us well, and I hope it serves you well. And share this with folks that maybe are not participating in this area of the market. Stock allocations among U.S. households, 40% plus, an all-time high. And it makes sense given the way stocks have acted, but it's just also an indicator that it's above the .com level. It's way above the lows of the financial crisis, and if people wanted to be in stocks, they're probably already in stocks, and we're running out of incremental buyers. And then, so here's Larry talking about uranium, and he said, the copper thesis has played out nicely. And from a Washington policy perspective, he points to uranium being the next similar trade. I agree with him, obviously. This is a game changer. A lot of hedge funds that he talks to are discussing this. And this is a pretty small space. This isn't, the Treasury market. This is a pretty finite amount of dollars that are in uranium. He again says uranium prices could double over the next 12 months. He has high conviction. I do as well. It's a pure centrist green energy play that both sides of the aisle can get back behind. Nuclear power is clearly changing the perception. And then here's a really big piece of news. So if you weren't in the uranium world, you wouldn't have noticed this. But U Participation Corp was a company that was buying uranium, physical uranium, and storing it. The original yellow cake. Denison was running this, and now Sprott, an asset manager, has a new team coming in to take over this. And what it in essence is, it's a closed-end fund similar to an ETF, kind of like gold GLD, the ETF, but for uranium. So now you have a vehicle that will be out there that will be a pure play on uranium, where retail brokers, family offices, hedge funds, etc., can participate in the bull market in uranium directly. Obviously, there was a futures market that's very illiquid. So if this becomes the way gold is, which is I think $2 trillion, something like that, now we have a vehicle that I don't. The Sprott Uranium Trust, I believe, is what they're calling it. They're going to be out there taking flows, dollars, and buying pounds of uranium and putting them in vaults. And so you're going to see a persistent buying demand for uranium that wasn't there. And this is on top of the utilities that have to come in to power their nuclear power plants. So it's a clear bullish sign that I think is really going to add fuel to the fire. We saw what it did this past week, taking out new highs. The Cameco call was very bullish. And so stay tuned. I think this is going to be a big, big moment for uranium. I prefer the miners myself because you get the leverage, but so be it. So, folks, that's the show. Please also subscribe to my Bakes Takes YouTube channel. The audio is the same, but the charts that I reference are on the screen. Please follow us on Twitter at @BakesTakes_ and other social media. I try to respond within 24 hours with anything that you present to me. I'll do that as best I can. Please use your voice memo app. Tape your questions and email to bakes at bakestakespodcast.com or write in if you'd prefer. I'll keep you anonymous if you'd like. Thank you for listening. Mike Wilson is my producer. Thank you, as always. Have a great week. This is Bakes, and for much-needed levity, the best of Anthony Jeselnik. Yep, it is inappropriate and salty, but it is all out funny. He's one of my favorites, and I recommend it highly. About 7-8 minutes, and you'll get a chuckle. So see you next week, folks. Thanks now. Bye.